The trend line. One of the tools many traders use to get strong entries in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show and explain the perfect way to analyze the market and get strong signal to buy or sell by using just trend lines. That sounds amazing, guys. Subscribe on the channel, like the video, and leave the comment below, and we'll see you in a minute on today's video. Alright traders, welcome back. You heard about the traders talking about the strategy of using trend lines. So trend lines are one of the common tools that we use to analyze the market and even to find some entries and stronger signals to decide if we are going to be buying or sell in the market. Now, what is the trend lines? Trend lines are the lines that are drawn to connect the peaks that are formed by upswings or the trough that are formed by the downswing that will support or helps the trader to identify where the trend is going. Okay, if you get a trend line from the upside to the downside, that is a downtrend. We are connecting, okay, let's say we are moving from this area, lower low, lower high, to the lower low, to the lower high, to the lower low. We are in the downtrend. Okay, so if we are in the downtrend now, we are breaking the lows by creating the lower lows. From the high to the low, we are connecting the highs, which are the peaks. These ones, that's where we started from. We started from where the trend formed. We created a resistance from this area. We are moving down. So we need to connect the peaks or the highs from where we are selling from is the high, and that is a resistance. Okay, because remember, we talked about support and resistance from our previous video. When we are selling from the high, means that we are entering from resistance. We connect the highs from where we are selling from are connected by a resistance trend line. So this is a resistance trend line because we are connecting the areas of resistance and we are selling from resistance, remember. So from the downtrend, when we are moving to the uptrend, okay, we started from this area, higher highs, higher lows, higher highs, higher lows. We continue with the higher highs. So we started from the low, okay? We started from this area by connecting the trough from the downside, the lows, okay? Those lows, remember, we started changing the direction from the downside. This area is a support and this area is a bullish reversal area. So now, as we are moving up, we are connecting from the lows and those lows are support. So this trend line that connects support is called a support trend line. That's from where we are entering for buy from. So that is a support and resistance trend line. Okay, so you need the maximum of 2 peaks to draw a downtrend trend line. Okay, you need just 2 highs to connect. If you want to confirm you are in the downtrend, you need to first have the first peak. This is the one, first one. This is the second. Now we are in the downtrend, so you need the maximum just only 2, at least 2 peaks to confirm that we are in the downtrend. From the downtrend to the uptrend, to confirm that you are in the uptrend with that trend line, you just need to make sure you can connect the first lows. The first 2 lows, this is a maximum. That's where we are buying from, and this is where we are selling from. So now there is a question. Okay, the question is, what does it mean when the trend line is intersected? What does it mean, for example, in the downtrend? Okay, so we started from this area. We have been moving up, rejected from this area, low, low, lower high, lower low, lower high. Okay, so from this side, we are going to be drawing a trend line. Let's draw a trend line from this area, from the first peak. Okay, then as we are moving down, remember, as we start from the first peak, from the second, that's where we confirm that we are in the downtrend. So now the market price moved up and starting breaking above the trend line. Okay, this is a downtrend trend line, which is a resistance trend line. So if we break above this trend line, we are giving an example from the downtrend trend. So this could mean that the trend has now changed. Okay, that is the first, because we are breaking above the trend line. Remember, when we are moving down and you start moving up and breaking the previous high, means that as long as you break from this area, if you break from this area, means that making higher highs. And when we start higher highs and higher lows, that is a change of the direction of the uptrend. So that's why we have to be careful with this. Maybe it's a change of the direction of a trend, or this could mean that this is only a false breakout or a fake out, and the price will soon head back in the original direction. So sometimes the market, let's give another example. We are moving up, okay, started from this area, higher highs, higher lows, higher highs, higher lows. Okay, let's say from this area, let's draw a trend line. Okay, we have the market that is like this. Okay, we have the two lows where we confirm from that we are in the uptrend. So we broke below the trend line. If you broke below the trend line, that is a support trend line. That means you have to be careful. Maybe this is a fake out. We are going to be back in the trend, and we continue creating high highs and higher lows above the trend line. Okay, so like this. That's why you have to be careful with the breakout or intersected. When the trend line is intersected from any direction of the market, you have to wait and see and look for some signs of the market is going to be changing the direction, or the market is going to make a fake out and continue in the same direction. We are going to take a look on example from the chart and see how can we deal with the trend lines to confirm a stronger areas to buy or sell from. Okay, now let's take an example from the XY dollar index. So let's start from the higher time frame. Okay, so the market is ejecting from this area. As you can see, as we connect this area, this is the high. This is a strong area for the market to be reversing from. Remember our previous video, we talked about the support and resistance, we talked about the zones, and we talked about the areas where there is a high probability for the market to be reversing from. So as we are giving this example from the high, this is a strong area resistance where we are expecting the market to be reversing to the downside. Okay, so now from this, we are going to be taking a look from the lower time frame so that we can see where we are going to be entering from, because we created two peaks. Let's check. Okay, let's use a line chart. We have this one and this. When we connect them together, we have two peaks from this area. Okay, remember from the second peak, that's where we confirm that we are in the downtrend. Okay, back to the candlesticks. We are connecting this area. Then where are we targeting? We are targeting from these areas. This one, we have this one, and then the target, since we are going to be reversing to the downtrend, we are expecting a bearish reversal. This is our target from this area. Okay, So this is also possible rejection from this one. That's where we can also take a TP from. So we are going to move to the lower time frames. Then we had a confirmation. We need also to stay below this trend line, resistance trend line, but we have to make sure that if we even break out from this trend line, we are going to make sure that it's not a fake out, or we are going to be changing the direction to another side of an uptrend. Let's find entries so that we can enter from the lower time frame. Remember, we've been analyzing it from the daily time frame. Okay, so we have a confirmation that we can enter from this area. Then let's check on our target. Can we get from this area? Let's check. Well, we can take the target from this area because we have inside strong zone. This is like a fake out. Let's take a TP from this area. Our entry is from this area. We have confirmed that we are in the downtrend. We have the first peak, the second peak from this area. We also had the third because we move to the lower time frame. Let's check from the line chart. Okay, from this. Now it's time to enter for sell. Taking a short from this area. The stop loss is above the previous high. That is our strong zone from the first peak. So the target will be from this area. As we are anticipating the market to move to the downside, we need the market also to stay below the trend line. Okay, remember we talked about that. Let's see what happened. Okay, we broke above as a fake out from this area. You can see we moved up, but we didn't stay above this area. That is a fake out. To know that is a fake out, when we break above, this is a resistance trend line. If we break above, we are going to be looking for that is a higher high to the higher low from the resistance trend line, which turn into support. And that's where we're going to be confirming that the market is going to be changing the direction to the upside, so that we faked out, but we didn't make a retracement from this area. That's why we are still expecting the market to move down. Still moving down. Let's see what happened. We are still moving down. Looks like we are going to continue by respecting our trend line. Okay, we are still moving down. So let's see. We have this area that will continue to stay below even the second trend line. Okay, let's see what happens. Ejecting from that area. Let's see, we cross this trend line, but we still have this stronger trend line. So you can see even this is a fake out. We've also got a ejection from this area. Let's talk about this. Okay, so we have the first trend line, which is a very stronger, where we entered from. We have the second trend line that we withdrew from this area, just to confirm that we are going to be staying below this area. But this first trend line is the strong one. This second, we also tried to change the direction to the upside, but we were in the downtrend already. The trend was stronger. That's why the market kept pushing down, even if we tried to break out and make a retracement from the trend line. So that's why you have to be careful with the trend line, as long as we can expect the breakout or a first breakout or a change of the direction of the trend. Let's also take a look on the bullish side. Okay, here even also from the higher time frame, we have GBP USD. The market is rejecting from the strong zone from the downside. This is a support zone from where we're expecting the market to be reversing to the upside. So now we are rejecting with the bullish candles. Now we are looking for the price start making higher highs and higher lows, so that we can draw a trend line from this area and start connecting the lows, which have to be at least 2 lows or 2 troughs. Now we are going to move to the lower time frame and see if we can get that confirmation. Okay, here we are from, okay, now from 1 hour time frame, we have 2 lows. We are looking for just 2 touches from the downside. Okay, we got one. So this means that we are going to be entering from this area. We are buying from this area. The stop loss is going to be below the previous first low, anticipating the market at least to reach these areas. Okay, this is our target. And then we need to stay above this trend line. If we break below this trend line, we have to make sure that we are not in the fake out, or there is a sign that the market is going to change the direction to the downtrend. So let's see what happened. Moving up, we are moving. Let's see if we can stay above that area. We are now breaking below the trend line. Okay, from this is the way you have to understand. If we break out from this area, we need to make sure that the market is not going to start making lower lows and lower highs from the trend line. Okay, so that is the first. Secondly, we have to make sure that if we break from this area, if we get just on the candlestick moving and come back, that will be a fake out. Okay, another scenario from this side, from someone who understands the market, this area where we entered from, this is also a strong area. If you can wait and stay in the market and wait from your stop loss, that means you are trusting the what? The trend continuation. Okay, if you doubt about this strategy, all you have to do is to close at least this profit from this area. Okay, from this yellow. Then let's see if this is not a fake out. Moving up, let's see what happened. Rejecting again from that trend line. Let's see what happened. We are moving down. If someone who want to enter for sale will be entering from this area, or wait for the high to continue for the low. So I'm going to stay in the trade and see if we are not breaking below at least this area. Okay, let's see what happened. Okay, again, if we move down and start rejecting from this area, I will be looking for another entry as I will also draw another trend line. Let's see. Moving up as a fake out. Let's see what happened. Okay, we moved down again from this area, rejected from this area, which means that maybe we have the first touch. Okay, we have internal area from this area and even from here. Let's see what happened. Moving up. Okay, we have the double bottom from this scenario. We have the first. Let's see, we can get another low. We are still consolidating from that area, from where we entered from this low, this one. Okay, we have the first low. Can we start as a new trend in the trend continuation? Moving up. Okay, now we got another low from this area, so I'm also going to be entering for this opportunity, entering for buy from this area. Stop loss is below the previous low. From here, the target is still the same, this area, and then we need to stay above the trend line. Let's now see what happens if we can continue until we get to our target. Okay, moving up, straight move up. Let's see what happens. Can we stay above that trend line? Okay, we are staying above the third touch. Means that we are still expecting the market to continue in the uptrend. Let's see. We have so many targets that we should be securing profit from. As we are moving up, we got a fake out from this area, but we continue moving up until we got to our target. So that was a nice move from GBP USD as we entered from this area. Then we've been patient and wait for the market to even create another support zone in the trend continuation, and that's where we end up getting an opportunity of continue buying from this area with the trend line. As a scalper, you should be closing from this area or right away when we have been breaking from this trend line, and then you come back in with the next entry as you enter from this area. So if you should be entering from this area, at that time you change and connect from this downside, or let's say you are in the market, you are not in the market, you will connect these areas, these lows, this one, the first one from this one, this is the second, and this is where you should be entered from. Okay, so now that's how we use trend line in the market. Remember, to use a strategy, you have to backtest before you start using it on your real account. Okay, guy, thank you so much for your time. Until next time, take care and be safe.